Good afternoon, everybody. What's poppin'? Pinterest is poppin'. That's what's poppin'. What's up, Eddie Vic? What's up, Rose Petals? Eddie Webb? What's happening, Bill? Always a pleasure to see ya. Veva, Brian, TJ, Dave, Abid, Fernando. Good afternoon, everybody. All right. What's up, Ben and Tate? I got to pop on a train back to New York City. I'm in Long Island today after this afternoon meeting. So let's get started. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own... I bet I'm echoing. Let me fix that. In light of your own financial condition. Hopefully that fixed it. Thanks, William. Position disclosure. I got out of Pinterest into the close. It's up after hours, but it did what I wanted to do. I bought it a couple days ago. It was a good, quick little trade. Got out of the way before earnings. Otherwise, position disclosure is relatively the same. I got into Shopify late last week, but I'm very small in it in this area. It's got earnings coming up also. It was a less is more trading session today. Ooh, Pinterest above 27. Pinterest up nice here after hours. ANET trading higher after hours also. Bam! Oh, look at that. Good to see everybody. Yeah, so that's where we're at. So, strong day for the market. SPYs are up 1.16% here. Q's up, let's call it 1.1%. IWM was definitely a disappointing laggard off the open and stayed that way really throughout the day. Russell is up 0.5, 0.6%. So the one thing I had noted from Pat's note this morning, that was just a statistic more than anything, but I thought it was interesting, and we were able to see it anecdotally in the price action last week. I'm pulling it up on my other screen here. Was this part of the note right here. U.S. mega cap tech stocks, the Magnificent Seven, collectively saw the largest net selling since September amid mixed Q3 earnings. On the other hand, S&P 500 constituents, excluding the Magnificent Seven, which is the biggest 7 stocks in the S&P, collectively were net bought on the week in 4 of the past 5 sessions. So we're definitely able to see that in the price action. The big question was if that trend, if you want to call it that, was going to follow through today. And it absolutely did not. You could see that very early on with how the market was trading in conjunction with how the IWM was trading, like the RSP versus the SPYs, the IWM versus how the SPYs and the Qs were trading. Off the open, you had that pop in the market that then sold off. But look at what the RSP was doing. Oof. Really gross. Filled the gap, went negative before popping back and actually working its way back up to highs. And the IWM, same deal. This pullback in the IWM from highs at 9:45 down to lows at 10:40. It was a brutal sell-off. We were quickly approaching yesterday's low. And then this was the area we had great patience on that long trade. Great patience on that long trade where we came in and I think some of you guys were buying the IWM there. I actually focused on buying the Qs just off its relative strength at that same time, just for a couple little trades into these moves that made a few dollars. But let's take a step back. Let's look at the daily charts. Let's review the morning meeting game plan and see how that game plan did. So obviously it's a strong day for the market. I just said that the S&P finished up 1.2% or so. It's where we are here after hours. But didn't really change too much. You know, it's certainly a positive to negate Friday's candle. Sorry. Still had a cold when I was in Africa, and I still have like a little cough from it. So getting back above Friday's high, it's obviously positive, but we didn't really clear out anything that could get you excited to be bullish. We didn't get back above any... It's definitely not Ebola. We didn't get back above any key levels. We didn't get back above SPY 420 Hold on, I need to mute this notification really quick. Sorry. We didn't get back above SPY 420. So it's just kind of continuing a little bit of an oversold bounce that we were already looking for from this market, just because we were getting really extended to the downside Thursday, Friday last week. On Friday last week, we hit the point where the SPYs were $10 extended from the 80-man on the daily chart. On Thursday last week, we hit the point where the Qs were $10 extended away from the 80-man on the daily chart. That's been a very consistent sign to begin looking the other way for just a small time frame move in the other direction. That small time frame move could turn into something different. So for example, back in August, day 4 gap down day, we were aggressive buyers on that day. You had the bigger extension, led to a small time frame reversal on the daily chart that gave a really big move. Or a more recent example that didn't give as big of a move but was a similar setup, day 4 gap down back here on October 23rd. Not quite $10 of extension, which is what we prefer and what we were seeing at the end of last week, but still that day 4 gap down was enough for the market to price and time correct for 2 trading sessions before creating a lower high and working its way back down. So when we start getting to that $10 worth of extension like we did with the Qs on Thursday, we got with the SPYs on Friday, that's really when we begin to look to go to the other side. But that doesn't necessarily mean that you're going to get a full-on reversal. It's just that you're looking for a high probability situation of a time price correction in the market. It's been extremely consistent, even if $10 of extension can become a little bit more than that. And that's what we got. With that said, the fact that the weekend made it difficult. Because Friday, even though we're hitting the $10 of extension in the SPYs, you want to start going long, and I did take a little trade that I just kept as a day trade in UPRO on Friday to the long side and was able to make money on it once we hit that level of extension. We didn't close well, and we've been consistently not closing well into the weekends because of all the geopolitical tensions that are going on. People have not been wanting to take the risk over the weekend, and then I'm no geopolitical expert when it comes to this war, and I know it's a very sensitive topic for a lot of people, so I'm not going to dive into my opinions on it. I certainly hold my opinions, but I won't dive into them. We'll just stick with the price action. The reports were that the ground invasion of Gaza was not as bad, for lack of a better term, as was maybe initially being expected on Thursday and Friday of last week. So you get your relief gap up this morning. But the relief gap up for us actually makes it for a very difficult trade. From a technical perspective, we would have loved a gap down this morning. Day 4 gap down, $10 plus worth of extension as we begin to get below 410 in the SPYs. It's been a really big down move. That's the type of event where we usually look to get really aggressive on the other side. But we didn't get that. We got the weaker close on Friday despite that degree of extension, plus the relief gap up this morning that made for a more difficult trade, a more difficult open. What we were looking at today's open, we opened at 413.50. I think we were gapping up like 1% or a little bit over 1% in the SPYs. What we were looking at this morning was a market that was now $5 extended from the 80 MA. And the discussion was, well, the bulls certainly haven't proven themselves. The oversold balance that we look for with the extension is now not there because of the gap. So this is a very difficult gap up to buy. The market's been so weak. But the risk reward of shorting that open also isn't great. Because what I used Mike Wilson as an example in Pat's note this morning. I guess we got more commentary from Mike Wilson at the end of last week or over the weekend, where his fundamental analysis was looking for 3,900 in the SPX. Let's just call that 390 in the SPY. And what I was saying is, from a risk-reward perspective on shorting 413 or whatever it is that we opened at this morning in the SPYs, it's not a good trade. Because even if you're right, even if you get the move down to 390 in the SPYs, you could easily get an oversold bounce back, and this is just how markets behave, right? Because trends are a pattern of lower highs and lower lows, or higher highs and higher lows. So maybe that lower high that eventually leads to a move down to 390 is actually up at 420. So, and that would make sense based on how we understand extension. We got really extended in the market. What happens when the market gets really extended? It needs to correct through time or price, similar to what we saw back here on the 23rd. The market was getting really extended. In this case, it was a very weak bounce. It took 2 days, but you had 2 days of price and time correction. You didn't even fully get up to the 80 MA on the daily chart, but you got $2 away. Just looking at the chart, less $1.50 away from the 80 MA on the second day. And that was enough of a bounce to kind of create a lower high here to give that next leg lower. So what I'm saying in the morning meeting is maybe even you're right and the SPY goes down to 390 if that's your thesis and you believe in what Wilson's analysis has to offer. You could get a snapback to 420, which would technically be a perfect spot for a lower high to come in, especially coming off of $10 worth of extension, and still be right. But if you started shorting at 413 and the move is up to 420, you're going to be feeling a lot of pain on the short side. Maybe you're even getting squeezed out of your positions before the rollover and the real trade actually comes into play. So where does that leave us in today's morning meeting with what to do? We decided that it's a less is more trading session. The risk reward to short, even if the weakness and downside momentum and trend continues, isn't good at that opening price. But the long trade, you had to have some real tenacity to keep positions long over the weekend, which I did. I kept a decent amount of stock long over the weekend, just going off that $10 worth of extension, but also not so much stock that if we did have the gap down on for day 4 that I'd be panicking out of positions. I would be doing the opposite. I would be adding into deeper extension on that day 4. So that was my game plan. So into the gap up this morning, I was able to benefit from it, selling some stock into that. But otherwise, if you didn't have longs over the weekend, which again was a pretty difficult thing to do, there was nothing to do this morning. It was a very hard trade setup, and then you could see it in the intraday price action. We had a really impressive continuation of this relief balance, maybe some late shorts from Friday who were trying to short for something to happen over the weekend, getting squeezed out, and then we rolled down. And this bounce was all big cap tech. It was the opposite of what I just showed from last week. Or last week was big cap tech selling. I remember, frustrated isn't the right word, but remember being annoyed, I don't know what the right word is, to see even in front of earnings that you had like Amazon just getting annihilated on this day 2 days before earnings, or Apple on you said it was Thursday last week, just getting annihilated as it lost its 200-day kind of in front of its earnings report, which is still later this week. So they were just kind of indiscriminately selling off a lot of big cap tech, but other names, more of those IWM names, some of the growth names, the banks, which were disgusting on Friday, had a good balance and good relative strength on Wednesday and Thursday. So today again was the complete opposite. If you were looking at stocks that were performing well off the open, you had to look at Google. And we had some weird tails that were going on. Something was wrong. Someone told me something was wrong with NASDAQ, so these tails aren't real. But all the same, Google, straight up for 30 minutes off the open. Look at the RSP by 10 a.m. Look at the IWM by 10 a.m., let alone by 10:45. Just, this also gave a quick brief pop, but then heavy selling. Everything was Amazon, it was Google, it was Apple, it was Microsoft, which was super strong off the open. To some degree, a little bit sloppier, maybe NVIDIA. Tesla actually was one of the weaker ones. Weird tails. I don't know what's going on with some of the data. Again, someone told me there was an issue with NASDAQ that was creating these weird tails on a lot of people's charts today. Obviously, they're not real prints. But yeah, so that was kind of today's trading session, and it hit a point. So taking a step back, the call for patience off the open was the perfect call, because even though we're in a bearish market and selling the pop worked in it, if you shorted the second the market opened and you did it in the NASDAQ, same deal. If you're shorting, 347.50, by the time we topped out at 350.50, you're enduring a lot of pain, even if new lows eventually came in. So patience off the open was the perfect call. I called out to the team here, actually the short in the Qs at 950 when this upside tail through 350 came into play, with a lot of extension for that time of day at 9:50. So that was the type of patience that was required. If you waited 25 minutes, you got a signal to be able to short here. If you waited a lot into this gap fill, and this was a tricky trade, we started calling for the long in the indices, kind of in this area, which happened to perfectly be lows. Again, I know a bunch of you guys tried to do this in the IWM. It was a tricky trade. I hope people were able to capture it. I know Pat tried it once and got pushed out. I tried it in the Qs, but I was light and loose, so I tried it a little bit early off the 10:30 candle. It broke lows one more time. I didn't get stopped out. I actually added a little bit to my position, got a little bit heavier, and it was just for this, quick bounce back trade, and sold the whole thing into this move. I actually rebought here, sold again, rebought here, and sold again. So it worked. It worked okay, but it really required patience today. That was the name of the game, and that's what our opening gap set up with the degree of extension that we had still on the downside of the daily chart, but with the upside extension that we had on the 5-minute chart from the gap. That's how we were able to rectify it, is just basically be patient and maybe try to focus on the names that were in play. The names that were in play, I would say for the most part, the names that I was looking at were pretty disappointing. JKS was great. If anybody caught it off the open, I called out 27.50 in the morning meeting as a spot to look at for JKS for a break, even though I thought that the earnings report was just okay. I've hit the point here where I like these Chinese names a lot more. JD has shown a lot of relative strength recently. It did nothing today, though. Baba has shown a lot more strength recently. It did nothing today. Baidu was weaker today. Baidu's actually building out a pretty gross bear flag. But all the same, JKS and the earnings report through 27.50 wasn't that bad. McDonald's was like impossible to trade. I don't really ever trade these consumer staple names too much. I thought that the McDonald's report was really good, though. So I thought that you could look long versus 260, but look how sloppy this thing was. If you tried it, you got stopped out early, and then there was nothing to do. And then the other disappointing one that was a little bit more of a focus for me was the SoFi. I thought that the SoFi earnings report was excellent. But as we have actually seen with a lot of decent SoFi earnings reports over the course of the last couple of years, they sold the heck out of what I thought was a really good report. They beat across the board. They guided higher. They are, I believe, expecting profitability in Q4. So that there's a lot of things to like in that SoFi report, but they sold it anyway. So that turned into a really tricky trade. You could see that it was wrong early on. What I said in the morning meeting was it should never lose 7.15, and I even adjusted that thought process after the market opened because it gave, you can't even see it in the chart, it gave a good initial pop. So fine, breaking the opening low is not necessarily the end of the world, but 7.15 wasn't even the level anymore at that point. It shouldn't have really lost that 17.50 by too much. It could have been a little bit sloppy because of the extension around 7.50, but it never should have been even testing it again. So it showed you its hand. It showed you that the idea was wrong. And I know a couple people maybe tried like this tail down here. It just wasn't right. It never really should have been trading down at these prices. So that was it. For the most part, pretty uneventful day. Was able to make some money in the Qs, manage my positions outside of that pretty well, and didn't do too much otherwise. And again, I really think it was the right call just to focus on being patient today. That's all that I've got. I am happy to take a look at any questions that you guys may have got. All right, from Dave. On SoFi, I got assigned some long shares at a cost basis of $7.90 last Friday. And I doubled my position by buying some shares around $6.90 right before the close last week because I'm bullish on the stock. Just got to be very careful doing that right in front of an earnings report. I really like to, because you never know what's going to happen on an earnings report. The earnings report was great, and they sold it the way they did. Imagine if the earnings report was just in line, or let alone was a miss on what they could have done with this stock. So it could have been really dangerous. So you just got to make sure that your sizing is appropriate. I'm also bullish on the stock, but we might end up being right, and it could go back to $5 first. Anyway, reading your question. Earnings went well initially this morning. I liquidated the position for a very slight profit. if you were to take the average price of the two tiers into consideration versus the sale price during the pre-market, so you're able to make a little bit. SoFi then sold off throughout the day, and I began to lay out some orders to buy back. So the first thing I would say before I get into the next part of it is I really don't love what you did. So it worked out in this case that you sold your position into that up move early on in the day, and that you were able to do it for, you know, what you're saying is a slight profit. My issue with that is I think you took on a ton of risks to only make a slight profit. That's my problem. I don't like the risk reward of the game plan here to average down on your stock assignment into an earnings report just to then sell some for a small amount of profit. I think that if you're going to take on that type of risk, it's because you believe in the stock, like you're telling me you believe in the stock, and you're looking for a move back to 10 plus. So, don't love that. But continuing with your question, SoFi then sold off throughout the day, and I began to lay out some orders to buy back in lower, starting at around 7.20, and then lower every 10 cents. Okay. As of right now, I'm pretty much dead even on the position, but my cost basis is much lower, and I'm significantly lighter in size. My question is this. Even though I haven't had any net positive cash flow in the trade yet, I've been able to continually improve price on the position despite the deteriorating technical picture. Should I end the trade early because it's a lower letter grade trade if I were to grade it as a new trade even though I'm already involved? For me, with positions that you're already involved, I always say follow the game plan to the bitter end. That's always going to be what I say. I'm not good enough of a trader to adjust consistently after I'm already in, even if the picture itself is deteriorating. There's a reason why you got in the trade to begin with. There's a reason why you're not already out of the trade to begin with. So despite all that, you're in it. I would follow through with the game plan that you established yourself, the usual, you know, buy the ticket, take the ride answer that I would kind of give you there. But, you know, it depends on your time frame. It depends on your goals for the trade. You know, if you're looking to build in and do a little bit of, you know, what I do as far as the cash flow trading, or you're buying down every 10 cents or you're selling up every 10 cents, it just, what type of room are you looking to utilize on that? Are you willing to do that down to $4 if that were to happen in a bad case scenario? If the answer to that is yes, then you should absolutely be, you know, sticking with your trading, continuing to build in and build out. If the answer to that is no, and as soon as it's at 650 you're going to be in a big problem, well, then you have to be game plan for that as far as where your stop loss goes. So the fact that you're already in the position, the fact that you got back into the position at, you know, 720 or so and didn't stop yourself out is all, I think, reasons to continue to stick with your trade. From Zahor, I waited until the McDonald's recovered after the sell-off, and then I took a long position after 10 a.m. It worked out okay. Okay, cool. So that's really good patience. That's really good patience. And this thing obviously broke up solidly post 10 a.m. Was able to recapture these tails that it was creating. It looked a little bit better. I can tell you, knowing yourself as a trader is a really important thing. I don't have the patience for it personally. For me, if this name is on my radar and it sells as hard as it did in the first 5 to 15 minutes, just like it, I take it off my radar and I stop looking at it. So, you know, if you have the patience to be able to stick with it and see if it's recapturing some key levels on an earnings report and then get involved in it on the way back up there, or, you know, versus this pivot low here at 1030 doesn't look too bad to me either. That's, you know, shows what type of trader you are and what your trading personality is, and it's a great job. So well done. From Ben, I bought JP Morgan at 1023. Oh yeah, okay, that was a call out that I made also. I liked how when we were looking for the market to potentially create a low, I'm typing up stocks and sectors to see what could lead the market higher. You know, we're watching the IWM in particular continue to sell down here very heavily. And at a certain point, I remember, you know, as early as 10:15, we were looking for a signal to come in that could say, hey, maybe the IWM is actually a buy. and we were saying, let's be patient, let's be patient. I remember Chris in the VTF was saying, hey, Derrick, let me know if you see a signal. I was like, there is no signal yet, but if you want, maybe, I think when it got to like 162.40, I was like, you could probably start to maybe build in small versus a gap fill area and look to get heavier if the signal actually comes in. The signal really never actually came in. But in part of the process of looking to see, hey, is there going to be a signal that comes in to buy the IWM, I'm typing up sectors, I'm typing up names to see where there might be strength, what things are pivoting. What affects the IWM, financials, energy names, small caps, mid caps, obviously. So, I type up the KRE, I type up the XLF, I type up, Bank of America, I type up JP Morgan. And I thought these pivots here at 10:15 and JP Morgan and Bank of America were very notable, considering that the market wasn't pivoting yet, but the market's in a spot where we're looking for this pivot. So it's like, okay, we're looking for the market to pivot. It hasn't shown us that it could do it yet, but look at what JP Morgan's doing, look at what Bank of America's doing. It might be worth a long versus this low, and if we get the market pivot, then these could be pretty good trades. And honestly, we didn't get the market pivot for quite a while after JP Morgan made it, which could be a little bit nerve-wracking, but the relative strength alone was enough for this thing to be a pretty good trade. But let me read the rest of your question. I bought JP Morgan at 10.23 with 50 cents worth of risk versus the pivot low, okay, versus this pivot low. I covered my risk at just over 137, okay, nice trade. And sold another fifth of my remaining position in front of the day highs in order to catch some profits and be more conservative in this market. Great. That's exactly what we should be doing in this market on our long positions, is being conservative and booking profit when we catch those bounces, because we all know a lot of those bounces have been short-lived. I was also trailing, and I got stopped out of most of it at 11. Okay, it's a very tight trail. I see it. You have the pivot low, you have the new high, so it's appropriate to raise your stop to 10.45's low, which is 136.92. It's probably where you got stopped out of the rest of the position. It is a very tight trail. Which again, a tight trail on a long position in a weak market is not necessarily a bad idea. Just recognize that it is a tight trail. So for me personally, I don't like to trail my full position usually. Well, sometimes I do. If I really don't believe in it, I'll trail it super tight like this. But for the most part, otherwise, I might trail some of my position that tight, but other I'm going to give a little bit more space. So you got stopped out of your remaining position 11 and was left to my small trail. Okay, cool. That I was keeping lower to avoid a shakeout. Great. That small trail I am keeping overnight because it turned out it was a shakeout and it improved. Trying to improve my game plans for trimming stock on the way up, but I don't know what signals to use. What milestones or signals would you have used to trim some stock in this trade? So again, first of all, I think everything you did on this was perfect. Maybe you could have been a little bit more aggressive to keep a little bit more of the position on the trail looser, a little bit less on the position on the trail that tight, but I don't hate it at all. If you're keeping the majority of your position tight because the market's been so weak and keeping just a little bit loose, I think that's great. So awesome, I love it. To directly answer your question, how am I trimming stock on the way up? There's a number of ways in which I do it, and it really depends on the game plan that I've created for myself ahead of the trade. A lot of that depends on my sizing for the trade also. How I'm going to be trimming and trailing depends on the sizing of the trade. The more stock you have, having larger tier sizes can definitely be beneficial just in terms of the complexity of the game plan. You can trim a lot more stock, but still have a lot of stock to trail for when the big move actually occurs, or looking for that big move. So there's a number of ways in which I do it. Sometimes I do it based on targets. Those targets can be based off of previous levels. So I don't know, just eyeballing this. On Friday, it looks like it had a little bit of a level around 137.50. So maybe I want to sell some stock in front of 137.50. It's just a level, it's a target. Sometimes I do it purely based on risk-reward multiples. I'm going to sell some at 3 to 1, I'm going to sell some at 5 to 1, I'm going to sell some at 10 to 1. Sometimes I do it based on extension. Technicals, I'm leaving some stock that I will sell if I see a 5-minute chart get what I think is pretty extended, which is what happened at 10 a.m. It's what happened a little bit at this initial move here up to 10:35. Sometimes I do probably more often than anything else at this point I do a lot more of the, I spend a lot of time talking about it in meetings, so I won't get into too much detail, but do a lot more of the incremental trimming followed by the incremental buying to create the cash flow around the core position, while the core position itself either eventually really works and pays me or eventually stops me out. That's a lot more of what I'm doing. And if I'm doing it incrementally, then I'm doing it on a somewhat random, I don't like using the word random because it's an appropriate amount based on how the stock moves, but it's just going to be like an amount. I'm selling some every 10 cents, every 25 cents, every 50 cents, every dollar, depending on my tier size, depending on the price of the stock, and then planning on rebuying it. So I think I just gave you about 5 different ways in which I will trim on the trimming and trailing. And which way I use is heavily dependent on the type of trade that I'm getting in as I'm getting in it, what the stock looks like, what the market looks like, how much I believe in the trade, how heavy I am, all those factors. So, appreciate the question, Ben. Follow-up question from Ben. Do you ever combine those trimming strategies on a trade or stick with one? I do sometimes combine them. Generally, I would say less complicated game plans are better than more complicated game plans. I do sometimes combine multiple approaches to trimming. You sell some at key levels and some into extension, or usually, yeah, so I'll do that. Yeah, again, tier size helps. Judy is back from Europe after a month away. That's an awesome vacation. Welcome back. I was away for over 2 weeks myself this past month. I was in a different continent. I was in Africa. Welcome back, Judy. Looks like I got through everything on the VTF. Popping over to YouTube. Ooh, the YouTube looks super blurry. Is it? People that are watching? Is YouTube super blurry? So if it is, I don't like that. It's good to know. I don't like how blurry that looks. I gotta talk to the tech team to try to figure it out. 180p upload. I don't do anything different. You know, the conundrum for me of trying to figure out YouTube or these different streamings, I don't understand it. Because I use different computers, but I use the same thing across the board, and sometimes things work really well, sometimes things don't work really well. It's just complicated. But I hate when the YouTube stream is not good. From Jerry C. Do you have rules around buying on the way down as opposed to just getting stopped out? Yes, I do. You know, they say losers average losers. I would start by that. That's like a common saying in trading. You know, they say that, you know, just constant averaging down or constant doubling down is a great way to blow up an account. I don't disagree with either of those things. I think, you know, very generally, especially for newer traders, you need to be very careful on just averaging down. You know, the way to average down, I believe, generally is to average down in front of a stop loss. That's the way you do it. So you could create a game plan for yourself. I don't know, just like picking a random stock. Let's pick something that's weak. I don't know, Square still getting killed? Yeah. You could say, hey, I think Square is a good fundamental buy at $40 or whatever, but the technicals here look atrocious. So you could, you know, you could game plan for yourself, like, I'm going to buy today versus Friday's low, and you start buying right at the open at $40 all the way down to Friday's low, which is a little tail down there, which is $38.91. So you buy a little bit at 40, and you average down at various prices in the 39s until it gets down to your stop loss. And you have that game plan set ahead of time. The whole key always with risk, no matter what way you're buying, or buying on the way down, or buying on the way up, or whatever it is to know exactly how much money you're going to lose when you get stopped out. That's the whole key on risk. Know exactly how much you're going to lose when you're going to get stopped out. So, you know, if you have a game plan in place, so I'm buying a little at 40, I'm buying a little at $39.75, I'm buying a little at $39.50, I'm buying, you know, every 25 cents until I get stopped out at yesterday's low, and your sizing is appropriate versus that stop loss, and you know exactly how much you're going to lose, it's fine. It's fine. You could also, even in theory, and this is what we do sometimes, but I think it requires a larger account and a lot of patience, is say, hey, I think square is really cheap here. I'm going to start building in without a stop loss. And I don't want to say without a stop loss, like really, because maybe your stop loss is $30. $10 worth of room, it's a huge move in a $40 stock. But you are buying so little versus your account size, and you're doing it every dollar because you want to get it on your radar and wait for that signal to come in, and you're beginning to build in really small that you can do it that way also. It's a very dangerous game. I will do that in very small ways myself. You can't do it on big size. You can't have big size and hold it against you and give it a ton of room. You're just asking to lose a lot of money. You're asking to risk a lot to make nothing, because eventually what's going to happen is you're going to be down so much that maybe it never stops you out and it works its way back up, and you get back up to break even, and you're like, oh, thank God I'm break even. Let me liquidate my position. And you took on all of that risk to make no reward. That's what ends up happening there. So I don't like generally the idea of buying on the way down. You know, maybe if you're able to do it in a very small way versus your account size, if you've got a really big picture thesis, what I was just describing, fine. What I prefer to do is to buy on the way down if it's stock that I've already sold at higher prices. That's a lot of what I do, and that's a lot of what I was doing in SoFi today. Like in SoFi today, you know, I sold a lot of stock on the way up. I think my best sale in SoFi was $7.86. And then I'm buying on the way down, for sure. You could even argue that I was catching a falling knife a little bit. But all I did in SoFi today was buy stock that I had already sold at higher prices. I did not buy any additional stock that I had not sold at a higher price today. So I was just taking that stock back at a lower price on the way down. So then even when this thing was making lows and looking terrible at $6.68, and I had just bought some more stock at $6.76, I wasn't panicking. I was comfortable because I was just, again, you know, rebuying stock that I had already sold. And even with SoFi being negative on the day, it's not negative on the day, actually, it's positive. But even with SoFi barely being positive, I'm up okay in it on the day because of how I traded it, and I was never in trouble. But again, it's just purely buying stock that I had already sold back. So yeah, I hope that helps, Jerry. No problem. No problemo. Alright, I'm annoyed that the YouTube is blurry. It looks like I got through all the questions in the virtual trading floor. There's no questions in the YouTube. So I'm going to wrap up the afternoon meeting there because I got to catch a train back to New York City. Have a great night, everybody. I will see you all tomorrow. Tomorrow, I got to talk to Pat. Pat, I forgot to tell you, Benzinga has me doing a morning meeting for them at 8:35 tomorrow. I might need you to do the VTF. Maybe I even emailed you about that already. I might need you to do the VTF morning meeting, so I gotta do this Benzinga meeting as a guest. Have a great night, everybody. See you tomorrow.